ways, well, actually, the market has a lot on its mind. For 2 days, it has tried to mount a challenge on that 8180, 8,200 mark and failed. And yesterday, the losses were maybe slightly pronounced. The overnight news could be seen as a bit negative. The number of polls that we have, pre-poll predictions on Bihar, are not necessarily very positive for the markets. The markets would have liked or perhaps even discounted a landslide victory for the NDA. Now the polls are kind of split. The CNN-IBN Axis or the Network 18 Axis poll itself indicated a slight edge for the JDU, as did the India Today poll, the Cicero poll. But there are other polls, the Times of India poll and the Z polls, which are indicating a slight edge to the NDA alliance. The point is, it's not landslide. And for people with stakes in the market, the fact that the Bihar state will not contribute to the NDA strength in the Rajya Sabha may be an important point, because when the Rajya Sabha composition changes, the hope was that the GST and other bills would get passed quickly. So this will have some implications for those who have put their bets on India. The second important point, of course, is the way oil has been rising. Now one could say, one will start wondering whether the correction in oil prices has definitely put a bottom at that $45 mark. Again, there is nothing that is emphatic or decisive about the crude price movements from day to day, but the fact that the Chinese markets are looking stable now, as well as Russia's entry into Syria, makes that a political hotspot. A whole host of reasons, as well as rig counts in the US going down, have all put a floor to crude for the moment. All these could be seen as at least ending the Indian outperformance. We'll have to wait and see how things pan out. The biggest thing going for India was the political stability and the leadership of the NDA government of Prime Minister Narendra Modi. If that is dented in even a very marginal fashion in the state elections, the markets will have to take notice of that. So for today, I think the market has a lot on its mind, and the bears probably have a slight upper hand.
Okay, well, let's see how that pans out. Lata, good morning. Anuj, morning. But for the morning, the SGX Nifty is indicating that the start will be in the green. In fact, most markets, whether it's Japan, whether it's Hong Kong is up almost 400 points right now. And even globally, the global cues at least have been very good so far. Even yesterday, the Dow posted its 5th straight session of gains and has conquered some technical levels.
So 17,000 is important psychologically.
Yes. Even the S&P 500 has conquered the 50 DMA. So the global cues are good. But yes, as you rightly pointed out, a higher seat count by from the JDU or from the Mahagathbandhan, as they call it, that of course will put a bit of a spanner in the works for our markets, maybe in the very near term. But Anuj, hi, morning. It's been a good run that our markets have had. Yesterday as well, we saw a good recovery from the lows. Does that at least give you a sense that the levels on the downside are getting protected?
Morning, Sonia. You'll remember, yesterday we made the point that the recovery in late trade, the 20-30 point recovery in late trade meant that the bulls were still in the game, and all the market needed is a gap up today, and we'll be back in the zone. And the SGX Nifty is indicating just that. But it's also indicating yet again that we'll open in that zone of 81.80 to 82.25. So far, this market has been doing extremely right things. This market has been, rewarding you if you are buying pauses. This market has been rewarding you if you're buying dips, and this market has been rewarding you if you have kept your stop losses intact, or if you have raised your stop losses. For example, 8100 was the stop loss. Yesterday the market went to 8110, didn't really go to 8100, and if you would have kept your stop losses intact, there's a good chance that this morning you'll make money at the open gap itself. So for me, again, this zone becomes important, because if the Nifty trades above 82.25, it needs to trade above 82.25 for a considerable period of time. Then there's a move towards 8400, which is also the 200-day moving average, and which would be the real test of this market's character in terms of whether it was just a powerful short covering bounce or whether we have put a bottom in place and are ready to move on. So that is important. And similarly for the Bank Nifty, 17,600 is the number that I've been talking about. That's the 50-day moving average. That's been major resistance. If that's taken out, 18,000 is the next level to watch out for. The other thing has been the way we've seen DIS selling in cash market for 3 days running. In fact, yesterday also DIS sold about close to 300 crores, and that selling is something that you need to take a bit of a note of, at least as far as the medium-term trend is concerned, because it's now not just 1 or 2 days selling, it's now a 3-day selling that we have seen. But the number that's really been eye-popping, and that's something that's made me really bullish over the last many days. I've been bullish on the market for the last many days.
Yes, you are.
And the reason for that has been the FI buying in index futures.
Yeah.
Yesterday also 600 crores of buying means in 5 days we have seen almost 5,000 crores of index futures buying. And you have to further segregate the data further. In that you have seen, if you see the long build-up of FIIs, in index futures, 1.8 lakh contracts have been added in 5 days. 1.8 lakh contracts is as bullish as you can get on the market in the near term. So this is a market which hasn't given you any signals that it wants to correct. This is a market which wants to go up. This is a market which wants to rally, and it wants to test that 8,200 mark repeatedly to see if indeed that's a big resistance. Because if that's taken out, then the upsides are huge. And 8,100 is now support for the market. That's your stop loss. That's also the 50-day moving average. Simple thesis: look to buy pauses, look to buy breakouts, and have your stop loss at 8,100. Chances are that you'll make money. The real test for this market would be at 8,400.
All right, let's put all that to an expert who's joining us now. Gautam Trivedi of Religare Capital Markets has joined us, as has Sandeep Shastri of Lok Niti Network on the line from Bengaluru. Well, both experts are here with us to tell us how seriously the markets should consider the various poll predictions about the Bihar elections outcome. Dr. Shastri, first to you, since you are a veteran of many such polls. Actually, the polls are split. What we're getting from the Access Network 18 poll and India Today polls are different from what the TOI and the Z polls indicate. How much accuracy should the market place on all this?
I think for me, the lesson which comes out of all these polls is the fact that the race in Bihar is still open. The race in Bihar is very tight. And the next 1 month, in terms of the campaign, in terms of the issues, is going to make a huge, huge difference. I think what the polls all commonly say is that for the people of Bihar, development is the key issue on which they are going to vote. The whole question is whether they believe that the development model which their Chief Minister, Mr. Nitish Kumar, offers is what they favor, or whether the development model which their Prime Minister, Mr. Modi, offers is what seems to be more appealing to them. So I think the race is very tight. I also would say the race is very open. And I think the nature of the campaign, the structure of the campaign, the issues in the campaign in the next 2-3 weeks, I think will be the clincher.
Okay, well, let's get a market view on this as well. Gautam Trivedi of Religare Capital Markets joins in too. Gautam, it's too early at this point, but what will the market look at? Will the market be disappointed if the BJP falls back in this race, or is the market's focus purely on other things which are now global?
No, I think the market is at this point starting to warm up to the Bihar election, no question, because we're not that far away now from the first round, which I think is literally about 12 days away. But the key thing really is the polls right now really don't give any real outcome. So it's hard to predict what's happening. However, our feedback on the ground still puts the NDA at a clear advantage, because I think similar to what Mr. Shastri said, our intel from the ground tells us that the youth of course are going to be a big swing factor in this election in both rural and urban parts of Bihar. And more importantly, I think they want jobs, they want job security, and honestly, I think the governments haven't really been able to provide it.
Gautam, my question actually is more immediate. Today we've got a mix of opinion coming from the opinion polls. How will the markets react now at this juncture when it looks very mixed?
Yeah, I don't really see a major reaction. If the polls indeed had a stronger outcome one way or the other, then there could have been a reaction. But right now, really, it tells you nothing. So it's very early days, and honestly, I think the impact on the market would be very muted.
Okay, that's positive actually at this point in time. Dr. Shastri, how are you reading it in terms of the future course of events? Are you saying a landslide for either groups is impossible now, that whatever will be a close finish? Or are you saying that things are extremely open even now?
I think given the fact that the race is clearly between two groups, I see a clear verdict coming out in favor of one of them. I don't think you will have a assembly where a government has to struggle for a majority. So I think that seems to be clear that the verdict will be in favor of one of the two groups. Now, which of the two alliances is able to win the public mandate, I think is still a little open. I think the voters are still looking, deciding, weighing options. As was said by my co-panelist, I think very clearly Bihar sees a urban-rural divide in terms of preferences. And also I think there is possibly the presence of a generational gap in terms of perceptions, in terms of aspirations. I think both these facts are something we need to look out for as we analyze the Bihar results. There are different aspirations in different spaces. There are different aspirations of different professional groups, age groups. And I think it's important and it will be interesting to see how the NDA camp on the one hand and the JDU-RJD camp on the other hand deal with their liabilities and promote their assets as much as possible and present it more effectively before the voter. That, I think, will be the clincher in the next few weeks.
Gautam, just one final question to you then on the Bihar elections. We'll talk about the markets in a bit as well. Do you think the outcome of these elections in any way can make or break the political fortunes of the BJP at the center? Because, you know, that's something eventually what the market is worried about.
I mean, the combination in Rajya Sabha, will that be seriously dented, right?
Yeah.
But I think the Rajya Sabha issue really cannot be solved with a single Bihar election. Whether we like it or not, the Rajya Sabha issue, unfortunately, is a 2 to 3 year program if the BJP indeed wants to get a majority in the Rajya Sabha. So that will not change significantly with merely one election in Bihar. And as far as the other question is concerned about the impact on the market based on the final outcome, I think the impact of an NDA loss is a lot greater than an NDA win at this point.
Okay. Well, point taken, Gautam and Dr. Shastri. Thank you very much for putting things into perspective and actually telling us that things are very open and the market, at least at this point in time, may not worry about how the pre-poll confusions are getting confounded. Well, let's get a global expert in as well to tell us how the world would react to a defeat for the NDA in Bihar, if at all, as well as other global factors. Michael Kurtz, the Chief Asia Equity Strategist at Nomura, joins us.